So today, let's finish that conversation that we started the other day about the basics of insurance. So let's talk about when you go have your medications filled. I always encourage people to kind of call around. And it's also a good idea. There's a number typically on the back of most health insurance cards. There is a number on the back, or call your broker, that you can call directly to talk to someone about pharmacy. And that pharmacy number is going to help you decide which pharmacy you want to have your medications filled. Now, some people will tell me, I am locked and tied into Tom's pharmacy in my local hometown. Okay, if that's where you want to have your meds filled, just know that you might be paying a little bit more because most insurance companies do have preferred and non-preferred pharmacies. So I think it's a good practice to make sure that you're getting your medications filled at the preferred pharmacy so you can get that deepest discounted price.
Yes, I agree, Megan. And, unfortunately, that's whenever you hear all the topics. Every now and then, they'll talk about big pharma, right? Mm-hmm. And they can come in and they can contract with your Walmarts, your CVS, your Walgreens, your nationwide chains. They can make better agreements with them because they buy in more bulk. Mm-hmm. They buy a lot more. So when you're dealing with a smaller, one of the ones in Oklahoma is Spoon Drug that a lot of people use around here. And so they will work with you, definitely.
Absolutely.
I mean, I'm not telling you not to use the mom and pop shops.
And actually, I've found that sometimes they work with you even more so. So sometimes I just think it's a good practice to call around and don't just get your get your meds filled at one place. And I mean, just if you're looking for a deeper discount, especially with medications going up in price.
Yes. And, it's really even odd. I always tell people, ask them what the cost would be if you run it through your insurance, and then ask them what the cost would be if you paid cash. Have them give you both of those prices. Sometimes you will be shocked that it's better if you pay cash.
Yeah.
And I don't even know how to explain how that works, but ask questions, ask a lot of questions.
Yes.
And just know that if you get to the pharmacy and you get that unexpected, because it's happened to me, I'm sure it's happened to you, you get a prescription called in from your physician, you get there to, the pharmacy to pick it up and they say, okay, ma'am, that will be $65. And you're like, what? Mm-hmm. You do not have to accept that prescription. Just because they called it in, you've got a person standing there wanting your credit card. You can definitely say, hold on a second, I'm going to make a phone call to my doctor, because doctors are inundated with drug reps. We've all heard about drug representatives that go to the different. So the name brand drugs, the one that you see the commercials on TV, I'm not saying that you don't need those drugs, but they're probably not in a generic form yet because the companies get to hang on to that for a while. So you have the ability to discuss this with your doctor and say, are there other things out there that will do basically the same thing as what you're prescribing for me? That would be in a more of a generic or a preferred generic capability that I could get my copayment down. I just can't afford $65.
Or $650.
Yes.
I've seen some of them that have been ridiculously expensive. And a lot of times, even at the pharmacy, the pharmacist will say, or the tech that's helping you will say, if generic is available, are you okay with generic?
They will.
So usually they'll kind of help you with that as well.
Yes.
Okay, so we've talked about prescription plans. I also wanted to dig in today, and this is kind of bridging that gap, the difference between a HSA, health savings account, and let's talk about it as it relates to a health savings plan versus a typical PPO plan. So on one of our earlier topics, podcasts, we had talked about, what is a deductible? What is a copayment? We talked about all of those basics. With a health savings plan, 9 times out of 10, you're going to have to meet your full deductible before the insurance will kick in. But premium wise, these HSA plans are going to be significantly less expensive month over month. The cool thing about an HSA plan is you can put pre-tax money into almost like a little bank account. And there's probably better words for that. So again, I'm just being very vague about this, but you can put it into a bank account, again, pre-tax money, and then you can use that HSA card to purchase anything as it's medically related. So your prescriptions, you can use that to pay to see your doctor. You could use that towards a deductible. You can use that towards feminine products. I've even heard you can use that HSA card towards formula for your baby. So lots of different things. Whenever we have an option for people to utilize or to pick an HSA plan or a PPO plan, what do you normally recommend people do?
And it's always going to be based on that individual, perception of, you just have to, and I know we do that. You have to dig into that family, that individual, that person. You have to ask some, I'm not going to say invading questions, but you just have to get on a level with them where you ask if there are any chronic diseases. Are there, chronic problems that you're dealing with? Do you have surgeries recommended that are coming up, that knee replacement, that orthoscopic? You have to know kind of what's in their future. But generally speaking, if they just say, hey, you know what? I never go to the doctor. I don't take any medications. No, I don't plan on anything happening. Then we go back to the point of let's put that risk factor at a little higher on your deductible. And an HSA plan is awesome for those type of people.
Yes.
That don't go to the doctor, because now instead of giving your money to an insurance company for that low deductible, and I feel like I'm repeating myself because I talked about this last time. Now, instead of giving that money to an insurance agency or company for that premium that they keep that you would never get back, now you're putting that extra money for that risk into your own pocket. So, and those things just roll over. I mean, it's not use it or lose it, like the flexible spending accounts, which is, back in the day, I think that's first how it kind of got started. And then they got to a point where the health savings account is an account, and some of them will even draw a little bit of interest. So, you could build that up. If you're lucky enough to go to age 65 and have nothing happen to you, then there's going to be quite a bit of money in that account.
Right.
That you can kind of it's almost like a retirement account. But absolutely. And I think a lot of companies nowadays, because the cost of health insurance is getting so expensive, I think the pandemic really contributed to these rates being higher and companies delivering rate increases every year. But you will have a lot of companies that will say, we're going to an HSA plan this year, employee, and you're not going to have $1,000 deductible. You're going to have a $5,000 deductible, but we're going to put $150 a month into an HSA account for you. Why don't you just use your brother as an example? Because he works for a big company, and him and his wife were actually pregnant with twins when they were told, we are now going with an HSA account, and they flipped out.
Yes. I liked, if kind of as a rule of thumb, if someone has met their deductible for the last year or 2 years, I will say, okay, you probably don't need to be on an HSA. That means you're a frequent user, meaning a frequent user of doctors and hospitals. Yes. So if you are, one who likes to have that copayment, that you can walk into the urgent care or you can walk into your pediatrician and that it's only going to be $20, then you really need to be on a standard PPO or an HMO plan. Probably an HSA is not going to be best suited for you. You're probably not going to be real happy with that. But if it's someone who's young, healthy, hasn't gone to the doctor, doesn't even have a primary care physician, is not established with anyone, takes no medications, you're right. They could build up that HSA account, especially if the employer is contributing $100, $150 per month. At the end of that month, or at the end of that year, they've already saved up $1,200 plus dollars. So then if we go into the next year, if they again go the whole year and nothing happens, they've almost got their deductible saved up in 2 years. So they're almost self-insuring a little bit. They're kind of self-insuring that risk a little bit.
True. I can see that.
But then the HSA card or account is always yours. So I just had this situation happen where a younger guy had been on the HSA plan for about 4 years, and he had been saving up, super healthy, never goes to the doctor. Last year he got married and decided that they're going to start their family this year. And so as we were kind of talking through that, he added his wife to the plan. And then this year upon open enrollment, we had that conversation, which is the part that I love about our job as brokers, getting to sit down, and he felt comfortable enough after working with me for several years. And he said, hey, what's your suggestion? We think we're ready to start our family. My wife is on this HSA plan. I'm on the HSA plan. They literally had like $7,500 saved up in their HSA account. But for this year, I had suggested to them that they hop over to the PPO plan because they already know they're going to have that big out-of-pocket expense with the birth of a child. So we hopped over there, but then their HSA account is going to pay for their full deductible and max out-of-pocket for them to have that child. So again, it really just is person specific, but I think there's lots to think about if you are given the opportunity to think about an HSA plan versus an HMO PPO plan. And also for employers, gosh, if you, I never want to tell a company what to do, but if you can at all offer options to your employees, because just know that one size does not fit all whenever it comes to insurance. There are so many different scenarios out there. And if an employer it's free to run multiple plans. It might be a little bit more of a headache because you've got, different options for the employees to select, but gosh, it could really save the employee a lot of money if you could run multiple plans.
I agree. And the other thing too is, we talked about if you don't understand it, you don't know what it is, you just stay away from it.
Right.
And I think HSAs can come off as complicated, and it's not what we're used to. Insurance has always been, back when I was younger, I think everybody had a $500 deductible or, really low deductibles, $5 copays, and then over time, insurance has just gotten crazy. But nowadays, they hear the word HSA, they don't know anything about it. It scares them and they avoid it. So I think as brokers, the fact that we go in and make sure that we communicate to every level of that group, and that we can put it down on the basic level that they can understand it. Don't be afraid of it because it's actually your money. Like you said, if you leave the company, I'm sure there's a vesting schedule in there somewhere for employer paid money. But if you contribute to it yourself, that money is just going to go with you. And let me point out before I forget, you mentioned it earlier, but it is tax free. So that should just ring in your ears because taxes are just such a pain. But if you're looking at 28%, you put in $100 into an HSA, you're only going to notice about 75 to 78 out of your take home pay. So, your spendable income is going to be affected less because it's coming right off of the top of your gross income.
So in the last few minutes that we have, I had made a few notes, and a couple of topics that we wanted to bring up was an HMO versus a PPO. I don't run into HMO plans very often, but I think that it's worth